What's going on, guys? It is September 4th, Friday, and we have a red day on our hands in case you haven't noticed. It's getting pretty bloody out there. Hope everybody's having a great day. I know some people are caught off guard. They're very confused as to what's going on in the market. If you've been trading stocks for any length of time, you shouldn't be surprised by this because this is just what happens when the scales tilt, right? So once we start to see huge massive run-ups, we see massive sell-offs for no reason, and it's purely technical. I highlighted it in my videos probably 5 different times now. I did a market bubble video, you can check that out. But we had a couple of people in the group, in our community and members, start to request information on what is shorting and how to make money on the way down. So I wanted to do a quick video as per member requests and just explain to you guys how the different types of instruments that you can use to your advantage against the market. So if you're expecting, there's multiple ways you can do it, right? You can go to cash, you can wait, you can buy the dip, you can just sit in USD, you can sit in Canadian dollars. There's multiple different ways you can do it. But I'll get into now just how to use these different ETFs and margin accounts for shorting and things of that nature. There's calls and puts for options. So there's multiple different financial instruments that you can use to your benefit. So again, SPY was well outside of the monthly Bollinger Band. That has never happened in the history of stocks where it has ended well. And we've always come back within that range. And this was just purely technical. We're still healthy. We did on the daily chart today, we tested the higher low here. So we did lose that, but no follow through. So we technically are not in an uptrend anymore. Bulls kind of saved that. So we didn't see much of a follow through 335.22 and we got to 334.87. So that is quite I wouldn't call that a double bottom or anything, but if bulls can save that here, then I would be willing to just write that off and consider it still in a daily uptrend. But taking a look at SPY, so I was accumulating a short position, and it's not your typical short position. So what is a short? You can go to Google, you can look at Investopedia. What is shorting? So shorting is basically a strategy that investors and traders use when they think the market's going to go down. So when you buy a stock and it's just common shares, you're anticipating that the stock is going to go up. So for SPY, the S&P 500 ETF, this is a bull, so a long position. When you buy SPY, which is the index that tracks the S&P 500, the top 500 companies in the United States, you're expecting that the price is going to go up. So if you think that SPY is going to go down, like I did, maybe you're starting to accumulate a bearish position. Bearish just means you think it's going to go down. So we had a higher low every single candle for the last 8 days. And as soon as we broke the low of the previous candle, we saw significant follow through of about 3-4%. And that's big on an index, right? So taking a look at SPY, I was accumulating a short position in SPXS. So what this is SPXS is an ETF. It's the same as SPY, but it's the inverse. So when this goes down, when this is trending down, SPY is trending up. So you can see why we have a little bit of a falling wedge here, and SPY was forming a rising wedge. And as this price trends down, SPY trends up. So as you can see, we're breaking out here in a big way, and this is one way to short the market. This isn't technically shorting, it's an ETF, so you can buy it in a TFSA or a registered account. It's on the NASDAQ, so it's something you'll have to buy with USD. So if you're using Canadian funds and it's all tied up, remember you have to wait 2 to 3 days. So if you sell a Canadian ticker, a Canadian stock, and you want to buy US dollars or a US ticker, you have to wait 2 to 3 days for those funds to clear. And that can make or break the trade, right? So you need to have potentially some US dollars set aside, or maybe you trade US tickers. There's multiple ways to go about it, but I personally like the ETFs. I can't short in a TFSA. So if you're in a TFSA or a registered account, you cannot short the market. What is shorting? Shorting requires a margin account, and a margin account is You can get one at Questrade, you can get one anywhere, but essentially it's just a open account where you pay capital gains. And shorting is basically you're expecting the price to fall, but you borrow these shares in hopes that it's going to go down, and then you sell those shares back and you essentially make money on those. So you're borrowing those shares from a broker, whether it be RBC or Questrade. If there's shorts available, you can buy those shares and sell it back to them at a later date once the price goes down. So there's a little bit of a difference between shorting and buying an ETF. There's also what's called puts. So what are puts? Calls just means that it's an insurance option, a contract between a buyer and seller, and you're expecting that the price is going to go up when you buy a call. And there's a certain strike and a certain date that it has to happen by. And all these decay, it gets complicated, but the long and short, calls are what you buy when you expect the price to go up, and puts are what you buy when you expect the price to go down. So again, the same is true with a put. It's based on a strike price, so a specific price by a specific date, and you can buy puts. Puts usually pay a lot more money and returns. You can get a lot more returns from puts, but the thing with puts is it's more of an insurance hedge, and you could lose all of your money. But the great thing about puts is if you buy $500, the most you can lose is $500, but you can lose all of it and essentially pay, you have to pay a premium, so a fee to have that contract. So you could potentially lose all of your money, but you can sort of limit your risk and decide how much you're willing to put up. So again, there's the QQQ, which is the ETF that tracks the technology sector, which is a bull ETF. So you're expecting the price to go up when you buy this name. And so if you're, again, looking at the monthly Bollinger Bands and you're like, well, there's never been a time in history where we stayed outside of those Bollinger Bands on the monthly for any length of period of time. So you're like, I want to go short. Maybe you do that in a margin account. Maybe you're like me and you have a TFSA. So you simply go to SQQQ. You look up that ticker symbol in your investment broker account and you buy SQQQ. So as you can see, this was trending down because it's the opposite of QQQ. And if we look at the daily, huge gains, up 34% in 3 days. So you can switch over to USD, convert your Canadian funds if you don't already have USD in your TFSA or your RRSP, and you just buy this ETF and it just works inversely. There's also FNGD, which is what I went heavy on. It's the inverse ETN. So it's a little different than the ETF. Just Google ETF versus ETN. Just the structure is a little different and fees and that type of thing. But essentially, this is a 3 times leverage inverse FANG ETF. So the FANG is Facebook, Apple, Amazon, Netflix. You get the idea. So Google. So I knew that all these stocks were running hot. So I decided to take a position. I filled at 775. 775, so that's close enough. I was up about, so it's up 50% in a few days. And I cashed out around the $10 level. I think I made about 15%. I bought it back yesterday at the end of the day when we didn't really see any bounce. And I expected that we'd potentially see a gap down today in tech, which we did. I sold it to begin the day. And then I rebought on a 5-minute lower high whenever we saw the QQQ sector. So you can see here on to start the day, we had a 5-minute. I sold right here to open the day. And then I bought back here on a 5-minute lower high and was looking to see this bear flag play out, which it did perfectly. And keep in mind, QQQ, I was expecting a bounce because we haven't been oversold on the 4-hour RSI since the March lows, since COVID dump. So I knew that there'd be some heavy buying on this name. But if you have any more questions, please let me know. Hopefully that answers some questions. There's multiple different ETFs for long positions. There's multiple different ETF for bear positions. So if you have any questions, if you want to know more about different names of tickers, what you can use to your advantage, just let me know. Hopefully that gave you guys lots of value and information. And like I said, if you have any questions, just message them in the comments below, and I'll do my best to get at them by the end of the day. Thank you so much, guys, and stay safe out there.